Welcome. In this video, will Onyxcoin go higher? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. According to Elliott wave theory, when we analyze the price movements, we can see that the current structure is progressing within the third wave. As you know, Elliott wave theory allows us to examine price behaviors in specific cycles. According to this theory, the third wave within a five-wave primary impulsive structure is often defined as the strongest wave, progressing with the highest momentum. The current structure aligns quite well with this definition. The first wave typically begins at the market's bottom, with investors gradually gaining confidence, pushing the price upward. The second wave is a correction against this rise, usually retracing to the Fibonacci levels of 0,618 or 0,786. However, the real story begins with the third wave. This wave represents a period where the market is strongly supported by major players, news flow turns more positive, and the general investor base starts focusing on buying. We are currently in this phase. The current price movement indicates that we are within the third wave, and this wave has already reached the 1,618 Fibonacci extension level. This level is considered the ideal target for the third wave in Elliott analysis, and it is typically known as an area where price gains significant momentum, volume increases noticeably, and technical indicators align. Reaching this level alone already shows that the market is strong, but the most exciting part may not have started yet. A strong break above the 1,618 level indicates that the third wave has not yet ended and may even increase its momentum, potentially reaching the next Fibonacci extension level of 2,272. Such a movement not only shows the technical strength of the price, but also highlights that buying pressure in the market is still very high. This type of scenario can create significant opportunities for both short-term and medium-term investors. If the price manages to break above the 1,618 level, it typically develops an extension wave that continues to the 2,272 level. This suggests that the third wave may last longer than usual, indicating the formation of an expanding impulsive structure. This situation often causes investors to delay taking profits, allowing the trend to continue for a longer period. For investors, it is crucial to closely monitor the breakout of the 1,618 level. The price movement that follows this breakout will either pave the way for a parabolic rise or form a new balance area with a short-term consolidation phase. In either case, it can be said that the strength and importance of the third wave remain intact. Additionally, the psychological aspect of this movement should not be overlooked. The third wave in Elliott wave theory is the period when the investor base is most excited, the news is positive, and a large portion of the community enters the market with the sentiment of "the trend has started." This allows the rise to continue in a more decisive and healthy manner. Therefore, targeting the 2,272 Fibonacci level is supported not only technically, but also psychologically. Such price movement also prepares investors for the upcoming fourth wave correction and fifth wave rise. The strength of the third wave impacts the severity of the subsequent correction and the potential of the fifth wave. Therefore, the current third wave movement directly affects not only today's market, but also future market projections, making it a key phase. In summary, when we look at price movements, we are within the third Elliott wave, and this wave has reached the 1,618 Fibonacci extension level. If this level is broken upward with volume, the next target is likely to be the 2,272 level. This development indicates that the market is in a strong upward trend, both technically and psychologically. As a result, the current scenario suggests that we are still in the early stages of a long-term rise, which paints a very promising picture for investors. When we look carefully at the chart, we can see that the price is structurally moving within a very healthy upward formation. In particular, the successive formation of higher highs and higher lows indicates that there is still strong buying pressure in the market. This structure is one of the fundamental characteristics of a classic uptrend and produces significant technical signals regarding the sustainability of the upward movement. The higher high and higher low sequence shows that with each pullback, the price can exceed the previous low and that buyers are not hesitant to take positions at higher levels. This reflects both a positive shift in market psychology and the fact that the trend has not weakened. These structures, frequently used in technical analysis, instill confidence in investors and lay a solid foundation for the continuation of the trend. Every new high being higher than the last suggests that the market is ready to explore new peaks. Similarly, every new low staying above the previous one indicates that the correction moves are shallow and sellers are not exerting significant pressure. This combination is the cornerstone of bull markets. Traders operating within such an ascending structure generally view pullbacks as opportunities, because such retracements are often a natural part of a healthy uptrend and show that the market is progressing with pauses rather than moving in a breathless rally. This is an important sign for a sustainable rise, especially when the price gathers strength after each correction and makes upward moves again. It confirms the strength of the trend. During periods when such higher high, higher low sequences are frequently observed, technical analysts also examine whether the price is moving within a defined channel. If the price continues this structure within a distinct ascending channel, new lows form with reactions from the lower band, and new targets are set toward the upper band. These types of structures provide reliable grounds for technical targeting. Furthermore, this type of rising structure is often seen in periods when investor confidence is increasing, when positive news flows in, and when market expectations are reflected in prices. This suggests that, in addition to technical data, fundamental dynamics are also supporting prices. So not only on the chart, but also in the overall market sentiment, conditions may be developing in favor of the bulls. In such an environment, the price is expected to maintain its momentum and test higher levels. For investors, this structure is quite valuable because the direction of the trend is clearly defined. This allows trading strategies to be built more reliably. Stop-loss levels can be placed slightly below the last low for risk management, while target prices can be set just above the previous high to maximize potential gains. In this way, both technical analysis principles are upheld and a controlled trading strategy can be implemented. Especially when the price forms a new higher high by surpassing the previous peak and then creates a higher low, the probability of the market entering a broader ascending channel increases. This structure gradually builds a buy-the-dip motivation among investors, and each pullback can turn into a new buying opportunity. As this cycle repeats, prices are gradually pushed to higher levels. In conclusion, the current higher high and higher low structure displayed by the price not only indicates that the current uptrend is healthy, but also that this trend may continue in the coming periods. As long as such structures remain intact technically, the likelihood of the trend continuing upward remains quite high. Therefore, maintaining this structure will continue to boost investor confidence and provide a strong foundation that could carry the price to higher targets. We must be patient here. This rising structure in the RSI suggests that the indicator has been gaining strength over time by making higher lows, and buyers are gradually gaining more control. Especially when the RSI pulls back towards this rising trend line, this area can technically act as a support level. So when the RSI approaches this trend line, the potential for it to regain strength and continue its upward movement is quite high. This signals that a possible short-term correction could be followed by a strong rebound. The RSI's approach to the trend line is also an important technical point that can offer traders new buying opportunities. This is because these levels are often considered to be the zones where market dynamics will experience a short-term cooling and then regain momentum. If the RSI touches the support line and receives a strong reaction from it, this could be reflected in an upward movement on the price chart. When this scenario occurs, both the indicator-based and price-based analyses support each other, and the technical outlook becomes much more positive. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.